Next week is full of catalysts, but the big one is the Federal Reserve meeting on Wednesday, where it is expected that they will hike rates another 0.25%. The rate hike is old news. What the big question is how Fed Chair Jerome Powell will act in the press conference. If Powell comes out hawkish, it could cause the stock market to sell off in a big way. But if he comes out dovish, we might actually see the rally return and continue throughout the week. In addition to the US Federal Reserve, the European Central Bank is also meeting next week, and it's expected that they'll hike rates as well, although we don't know exactly how much they will hike it. Europe is experiencing significantly more inflation than the United States, so they might still need to hike quite a bit. Also, the Bank of Japan meets next week, but their situation is a little different. Japan has been experiencing deflation for almost 2 decades now, and they're only now starting to experience inflation, which, believe it or not, is good for their economy. So what they do isn't really the same as what the rest of the central banks do. Finally, 168 of the 500 S&P 500 companies are reporting earnings next week. So when I say full of catalysts, I mean next week is full of catalysts. After breaking through to make new highs last week, Bitcoin ended up selling off this week. In fact, last week's low of $29,850 ended up not holding. And Bitcoin ended up not finding support until Tuesday, here at $29,548. As you can see, Bitcoin is still not breaking out to either direction. We're still in the price consolidation pattern, which means we don't know which way it's going to go from here. We're approaching this parallel channel, which could be either a bullish or a bearish catalyst. If Bitcoin finds support at this channel, it could end up breaking through the $31,800 year-to-date high and make new highs, with bulls predicting a new resistance point not until 34,000, so there's some serious upside from here. However, as you can see day after day, this is not good bullish price action. This is bearish price action. So it's possible that the big move Bitcoin will have from here is a breakdown. Additionally, with the weekly low being so close to where the monthly low is here at $29,432, I think if the week breaks, so will the month. At that point, we might find support pretty quickly before we hit 29,000, but it's also more likely that we'll sell off even further. And as you see in the past, there might be points of support down here around 27,500, followed by our old 26,300 level. The biggest problem is there hasn't been any real price action in Bitcoin for several weeks, and the bulls like to see momentum to the upside. When you don't see increasing prices, the next move is often to the downside because the bulls get bored and leave to go off to different assets, and there's no buying power left to be able to hold up the price. This week's winner was Schwab, and even though it didn't report remarkable earnings, in fact, it's just better than expected. When you are expecting the worst, investors will cause your stock to pop to the upside when you come out and don't disappoint. Schwab was left for dead during the regional banking crisis in March, so when it came out and reported decent earnings with good forward guidance, the stock popped to the tune of 13.6% and came in as the portfolio's biggest winner. It was a tale of two cities in the investments in play portfolio, with this week's loser, Tesla. Tesla actually beat analyst expectations and reported a good quarter. However, when CEO Elon Musk came out and announced that there would be further price cuts to their models, this was not what analysts wanted to hear. When you're a supercharged high-growth tech stock, you need to have great profit margins. And in order to compete, Musk is going to keep cutting prices so that he can beat out the legacy automakers. But in the short run, this is not what investors wanted to hear. As a result, Tesla sold off 7.59% and was the week's biggest loser. The regional banks started reporting earnings this week, and almost all of them were better than expected, which caused a pop in the entire sector. As a result, the biggest winner in the speculation in play portfolio is the regional banks ETF, KRE, which popped 7.54% this week and won the week. There's not much more I can say about GoldenMinerals, my high-spec junior gold miner play. This week, an analyst came out and cut their price target from $11 to $9, which I think is a pretty remarkable price target considering it closed the week at $1.41. Regardless, a price cut is never good, and GoldenMinerals sold off once again, breaking through its previous all-time low to make a new all-time low. It sold off 8.44% and was the week's biggest loser. When the regional banks started reporting earnings this week and impressed to the upside, I decided to use a stop-loss limit order to lock in profits in case my position in the KRE, the regional banks ETF, decided to pull back. My stop got triggered on Thursday with an order that filled at $46.42. This sale locked in 7.38% in gains on shares that I bought at $43.23 back on March 16th, and lowered my per share cost 8.01% down to $39.49. This position's pretty small to begin with. It is in my speculative portfolio, but given how much we've seen an improvement in the regional banks up until this point, I wanted to lock in profits and reduce the allocation. I've just got a feeling we might see some bearish action in the coming weeks. As a result, my next buy target is $35.78, slightly above the low that we saw in May, and my next sell target is at $65.04, near the high that KRE saw before this whole banking crisis hit in March.